Hi, my name is Eric Baxley. I'm the Chief Marketing Officer at Nobody Studios. I'll be giving regular updates regarding a handful of things: trends in the AI market, updates on progress regarding Nobody Studios as a whole, as well as individual portfolio companies as we scale and exit them. At times, I'll give you a behind the scenes look. I just did that last week. And occasionally, I'll pull in some industry experts, thought leaders. Today, I'm really happy to be joined by Mark McNally, CEO of Nobody Studios. We teamed up early in our careers in Silicon Valley, had a lot of fun together, partnering, getting our two companies to work together. And today, I want to cover three topics. First, dynamics, trends in the AI market. Second, what is so unique about Nobody Studios to address this huge market opportunity. And three, why now with Nobody Studios? From multiple points of view, whether you're a founder that wants to build a company with us, we have a lot of those people coming to us, a partner, investor, or somebody that just wants to have some fun and join us and help build some of these companies. So once again, I'm really happy to have Mark here today, and let's jump into the first section, market dynamics. Mark, share with me your wisdom, what you've seen.
Hey Eric, good to see you. Thanks for having me. Gosh, man, I think we're such in a unique spot right now in history that I'm not sure we've ever seen before. I've been doing startups for close to 30 years, and for 26 or 27 years of those, that was exactly the same playbook. Maybe the time to launch something got a little bit shorter. Maybe the amount of investment you had to put into data centers changed. Like there were some changes, but the radical shift has nothing's happened like it's happening right now. So there's two things. The future, everything in our lives is going to change in the next 5 years. And that sounds like a big statement, but I say it because people who can't nod their head need to stop and ask themselves if they understand what's going on. And I'm not even talking about AI, right? AI is one massive paradigm shift. A paradigm shift is something that makes you recalculate everything, right? Like power, right? Like the motor car, like aviation. AI is definitely a paradigm shift. Everything in our lives is going to have to be recalculated. But so will robotics, longevity, breakthroughs in longevity. What happens when we start living to be 250? Everything gets recalculated. Your 401ks, financial planning, career planning, life planning, everything changes. So we're going into a space, not in the next 100 years, literally the next 5 to 10 years, everything in our life is going to be changed in about 10 different ways. Now, that's going to be an incredibly traumatic process for a lot of people. It's going to be a lot of disruption. But if you are a builder, if you're in the process of being involved in those kinds of waves, and you're an investor, it's also going to be an incredibly exciting time. And I could talk all day long about the possible negative effects of some of these technologies, but at the end of the day, we're not putting this back in the bottle. And I do believe humanity is going to, completely advance to a different level in the next 5 to 10 years, and it's an exciting time. I'm so thrilled that my career overlaps with this part.
Absolutely, Mark. And I'm going to hit on something you just said. I think back to many years ago, .com days out in California, when I was there with you, Mark. That was obviously a big explosion in terms of opportunity, wealth creation. And fast forward now 100 years, well, okay, not 100, but today, all key executives, marketing leaders, CEOs, tech leaders, anybody, business leaders now clearly say, and I would agree, this is way bigger than the .com boom. And it is the biggest wealth creation opportunity. And it's happening right now, right in front of our eyes. Isn't that exciting? Yeah.
It is. It's exciting to be a part of it. I also think the thing that people don't quite understand is the speed. So if they're just like a consumer user of say like GPT or AI, and then that last year and a half, 2 years, they've got a sense of how fast things move, right? But what does that actually mean if you think about how you used to build companies, right? How you'd fund them, how you'd staff them, how much money you put into them with like a 10, 20-year horizon expecting a return. What if you're building a company that's going to be the best in the business in like 12 months and it's going to last 5 years in that spot if you're lucky? Like, you got to think differently. You got to plan differently. The reality of it is you're seeing while you easy to watch these big headlines about people raising tens of billions of dollars at $100 billion valuations. Like, it's almost like a crash. You can't help but to look at it, right? But what's actually happening is the speed of innovation is creating an incredibly acquisitive market. People are large incumbent players, established companies, publicly traded, private equity backed. They're having to acquire more than ever because the speed of innovation is happening way faster than they can. Like we've always said, big corporations, it's hard to innovate, especially when you have successful products. That's standard. So you use acquisition as a method of innovation. And that's only going to happen more and more. When we started this, we said that was our thesis. And if you've seen what's happened in the last 90, 109 months, 80 something percent of acquisitions have happened in seed stage and Series A companies. That's unheard of. These are all very early stage companies, and most acquisitions are happening under $300 million. So it's exciting to see $800 billion valuations out there. But the reality of it is, building good companies have good technology with good teams, but making sure you build them in a way and capitalize them in a way that you can exit them at the appropriate stage. That's going to be where most employees, startup founders, investors see the return that they're looking for.
Absolutely. Hey, you rolled out probably 3 or 4 things. You threw out a lot there, Mark. So I want to pick on one, and that's speed. That's one of my favorite topics. So speed, let's look at some data points, which I know everybody's heard before, but it's a good refresher. So let's take a look at mobile phones. To get to 100 million users, that took 16 years. 16. Internet, 7 years to get to that level. ChatGPT, 2 months. Right? Isn't that crazy? 16 years, 2 months. So it's that speed. Here's another few things about speed. The speed at which you can develop a new product, a new company. I just was at a prior company, but few people get together in a room, build a product, and it's out the door. I know one new product or capability we thought of, dreamed up, rolled out in the market, 4 weeks, $500K in revenue, AR. So that's the speed I'm talking about. And not only things you can personally develop, but I don't know about you, Mark, but every night I'm up late looking at all the latest things. Every morning I wake up, it's like, wow, there's so many new products developed. And it's that speed, and it's disrupting. The best new thing was last week. It just got eclipsed by something new. So that speed keeps us all not on edge, but it keeps us sharp, doesn't it? It makes that competitive, and it's pretty exciting.
I think what people focus on is the speed of what you can do, but not a lot of people talk about the speed at what you've done is going to be disrupted, right? So if you've done something and someone else can do it just as fast tomorrow morning with your lessons, like that's scary. And if you're doing things that are fairly obvious and they're all digital, AI will start creating this stuff without us, right? So you actually have to be a more ingenious, I think, founder and investor to make sure you're finding the niches in the market where you can actually build defensible, long-term or medium-term, companies with value that you can exit, and it's just a different mentality. It used to be the first person out and you could enjoy a 10-year horizon of success. And I think that these big, giant fundings you're seeing are following that same playbook. Just the numbers are becoming bigger.
Yep.
But the reality is, if you see the really exciting things, are the 5 founders with no real money got to $10 million in revenue and sold for $400 million.
That's right.
Like that's the super exciting stuff. And if I'm picking my bets, I don't want to swing $100 billion and hope I'm one of the winners. I want to be in those areas, and that's exactly where the studio is focused.
Absolutely. There's a couple of points I want to drill down on that you mentioned, but a little side note, not necessarily market dynamics, but I'm already thinking ahead. You brought up something we just talked about. A new product gets developed in 2 days that eclipses what you just thought was the best thing around. So that's about moats. A little side note here, to me, in my experience, there's 3 or 4 things that are key to a company, which, jumping ahead a little bit, as Nobody Studios provides, is moats, I would suggest, are one, do you have, to your point, a very good standard operating procedure documented in a very specific vertical pain point that you're addressing, right? So that's one that you've got to document. AI loves that. It can operate on that. 2, if there's any proprietary data sets, of course. 3, the fact that you can embed that in the workflow, right? And then that becomes so ingrained in the work process, it's impossible to rip out. And then 4th and final would be distribution, right? You might have a great product and idea, right, at some other company. If we're developing it, we have access to boardrooms and people at executives at key companies that can just say, hey, let's use that. So to me, not really part of some of the things we're going to talk about today, but moats, I think that's an important thing to think ahead about, Mark, right?
Yeah, 100%. That's what I was talking about. I mean, we're moving into a spot where the speed of going into market is awesome, but also the speed of disruption is just as scary. In fact, it might be scarier because once you've proven something, 100 people can be right behind you, probably better, right? And so we talk a lot about what we call dirty AI, which is some of the things you just talked about. I know the things AI is not going to do well ever or not for a long time. And that's like reaching out and negotiating a strategic partnership. You know, that's going to be executive to executive, probably still going to involve some face-to-face or at least these kinds of conversations. It's going to require nuance of language and negotiation and value exchange, things that AI is not going to understand for a long time. And even if it could understand it conceptually, you're not going to negotiate a strategic partnership with AI for a long time, right? So if you can do a strategic partnership that leads to integration, you know, maybe you're developing really something key that's going to be integrated into another product, like, you know, Apple's distributing or somebody else. That's something that is unique to you, right? If you're doing something that's an integration into a hardware, something physical, or you're building something, right? The Aura Ring is a great example of something that is high technology, but you had to manufacture something. There's stuff that AI is not going to do for a long time. You know, distribution, partnerships that are going to be unique channels. Here's the market, everybody agrees it's great, but here's the 3 biggest channels to get in there, and you lock up 2 of them. Again, these are the soft skills or relationship skills that we can protect for a while as humans, that I'm always looking for that element in the things that we build, right? And it just gives you some moat, it gives you some protectability. It allows you to carve out something that is ultimately acquirable or defends your business long term.
That's right. And I'm going to reiterate 2 more market dynamics that you mentioned, but I want to nail them again before we move on to part 2, which is a little bit more about Nobody Studios. So market dynamics, we really saw, you know, late 1990s, I guess 2000s, as you shared, Mark, value was captured, you know, hey, let me get in right before the pre-IPO rounds, right? And that is definitely, times are different, right? It's now increasingly realized that value at pre-seed through Series A stages. So 50% of exits, and that's data you can look up from Carta, 50% of exits now occur at pre-seed and seed, with another 27% at Series A. So that's one point you touched on, Mark. And then the second and final point is it's very acquisitive, as you said. So 87% of acquisitions now close under 300 million, which you said. And to your point, and having worked at large companies know they can't innovate fast enough, right? And so they're kind of looking on the side for, hey, you know, this company, Nobody Stews or whoever, can build something quick. It's like the aircraft carrier versus the Navy speedboat, right? With the Navy SEALs and that quick speedboat, right? I think I'll bet on them. But and so those acquisitions, 87% are now happening under 300 million. So anyway, any other final comments on market dynamics before we move on to part 2, Mark?
Yeah, no, I just think I do think that a lot of people are getting mistaken by share prices or just trying to be part of the big thing. I've had a few friends reach out to me saying, "I have an opportunity to invest in the latest OpenAI round. What do you think?" And I'm like, I really want to talk to them on a rudimentary level, right? Do you understand they're worth $500 billion? Like 5 years ago, there was no companies worth that, right? Like, what is your thesis if you invest in them, right? If you put in $1, you're maybe want to double your money, then your thesis is they're going to go to $1 trillion. That may happen. Maybe your thesis is going to go to $3 trillion. That may happen. But still, what's the reality of the history of the market and the revenues being generated? I think there's a good chance you'll make some money, but it's not going to be the, hey, I got into Google in 1996 kind of stuff, right? So it's all about what you're looking for. If people ask me, I want to make double my money in 4 years, should I buy into the last Anthropic round? I'll say, sure, of course. Maybe it'll work, maybe it won't, but it's reasonable thesis. But if you're buying into something when it's early and it's young, and your thesis is going to go from being worth $10 million to $1 billion or 400 million, like, what is the return there, right? The return there is 40, 50x, and the likelihood of something going from small to big is higher. The risk is lower. The less of capital, the amount of capital you have to deploy is less, and you can also make multiple bets. And so at the end of the day, we're not competing with either strategy. It'd be like saying, should I invest in real estate or should I invest in startups? It's like, they're totally different theses, right? But investing into super late stage companies, whether or not they're AI or not, if they've already gone through 42 different rounds of increased valuations, just understand where you're getting into on the hockey stick, right? And our thesis is the opportunity is younger and smaller, and the quicker wins, where you're going to see the biggest returns. Sure, there's more risk potentially, but I'd argue buying into something low and being able to sell it at the same price or higher is less risky than buying something super high, because I've been at this long enough, unfortunately, to see multiple downturns in markets. And I remember distinctly a day when I looked at Amazon's stock ticker at 93 cents a share. I remember that in
There you go.
2002. So,
There you go.
I mean, I should have sold my bike and bought Amazon, but I'm just saying these are
Yeah,
times that companies went public and had success and cratered, and the high flyers, unfortunately, are tend to go through those cycles.
that's right. Very good. All right, I think that wraps up our first section, which is great. Just market dynamics, and we'll keep exploring this every month, different trends we're seeing. So let's hit up number 2. Why Nobody Studios? There's a handful of reasons that we're going to dive into right now. What makes this unique, interesting, different. But before I even jump into that, Mark, just give us the elevator speech. The 2-sentence version of who is Nobody Studios.
Look, I mean, I'm out there saying it a lot of different ways, but at the end of the day, the best way to think of it is we're a company that builds companies, right? So the original thesis was everything we just said. We're moving into a space where you have to build companies faster, cheaper, leaner, and optimize them for early stage exits. That was the goal. And then, so how do you do that? We need to be in a spot where we're able to take lots of bets, make smaller bets, and then double down on the ones that actually work. So consider us founders that are also the first investors, right? And our goal is to do lots of companies at scale and to really mitigate the risk of early stage creation, which I've done a lot of startups. It's really hard every single time you're doing the same thing. You're trying to recruit the team. Sometimes you get some people from your past deal. You're getting new people. You're trying to attract investors. You're trying to pull together the documents. You're getting your first product out the door. There's all these different moving pieces, but it's very inefficient. Like the startup process is very inefficient, right? And it's where it translates to risk. You see these massive failure rates in early stage startups. And so we said there's got to be a better way. One, we don't want to just invest and forget it. We want to be hands-on tinkering, right? So think of us again as founders, not passive investors. We don't write a check and then 9 months later go, I hope it worked or it didn't. When we decide to write a check, we have a thesis and we're doing small checks, but they're companies we build. We like this idea. Let's invest 10 grand. And then if it validates what we thought in that thesis, we might invest 40 grand. And if that validates it again, we might go higher. And we structured that into a thing we call Frugressive, which is a mix of frugal and aggressive. We're just trying to mix the two. Be cheap, be fast until you get real proof on something, and then double down. And if you're doing that, you're also trying to create an environment that encourages risk taking, which you have to encourage failure, right? Or, hey, that didn't work, stop. No problem. What do we learn from it? Let's do the next thing, right? And we work really hard to try to create that environment. But if you know you're trying to create that, it's different than if you kind of find out later, oh, we should have done that. Like, we know we want to be in a spot where we're tinkering with lots of things. We're green lighting a small percentage of them to go the distance. We're being very disciplined or strategic about making sure we don't put too much money in them. And the reason why is if you put too much money in, then you have to only go for the moon, right? If you put $50 million in an early stage company, you probably have to turn that thing into a $500 million company to make any sense for investors. But if you can keep it relatively disciplined and you don't swing necessarily for the fences, but you give it what it needs to grow, then you can be what we say optimized for early to mid stage exits, right? So in order to further that, we built processes, systems, recruited a world-class team, got very fortunate to have just a world-class group of initial investors with their backgrounds and reach is kind of unparalleled. And so we have, an unfair fighting advantage in terms of access and knowledge, and a lot of people like you and myself who've been doing this for a long time that have scars and lessons and some successes to pull from. And we're just trying to figure out how to do this at scale because we think the future is not being right about doing one company massive. We think in the current, state of change and speed, that's actually the riskiest bet.
Yeah, that's awesome, Mark. I'm going to drill down on a couple items. Let's pick on founders. So since I've joined, I've been here about a month, Mark. I've had a lot of friends reach out. People that are founders that have started their companies, have initial ideas, maybe even a product or market, and they call me up. And so not my words, but let's use their words, Mark, and it matches up with what you said. But there's some nuances. So one, you have an idea as a founder, to your point, oh my gosh, I got to hire some marketing, some sales, engineering, development, legal, this, that. So that's something we provide. We're in the process of building companies. So founder comes to us, hey, let's build it together. So that's one attractive point. Second, Mark, maybe you can talk to this. Not only do we have the machine to help build, but take a few minutes to talk about the incentive, how, as we have multiple founders, why founder number 3 might want to help founder number 5, if you understand where I'm going. Yep.
Yeah, look, I mean, I think, first of all, anytime I talk to a founder, I love entrepreneurs, and I always start and end with that, right? Like, wherever the conversation goes, like, my job is not to convince every entrepreneur to become part of the studio. I believe that every entrepreneur has multiple ideas and has multiple career cycles. So I care about building the relationship, understand what makes them tick, and if I can help them, even if they're not part of the studio, I'm kind of rooting for all founders. But I also tell them, if your dream is to start from the garage and grow to your IPO, and that's, you're going there no matter what. Again, I'm only going to cheer you on and share knowledge and whatever. But I do think that that world is changing. I think that that path is changing as being a realistic outcome. And I say, I know what we offer. We're going to offer an instant founding team of world-class executives, a family of people who care about what you're doing, the initial capital, best-of-breed expertise in marketing and legal and finance and strategy. But you're also now going to be part of founders that are all cross-incentivized. So we did something really early on that was hard to figure out, and I haven't seen a lot of people figure this out, but we determined early on that if you became a founder of any one of our companies, you're going to get ownership across the entire portfolio, which is the same thing if our investors invest, they get a piece of every company we have created or will create. And we did the exact same thing for our employees and founders, which is unique, because I always tell people, hey, look, I don't need to compete with the IPO. If that's what you want to do, do it. I've done it. I get it. But we offer you a big stake in your company, instant founding team, capital and growth, and a piece of everything else we're doing, and an environment that encourages you to do the next idea or the next 15th idea. Like, so for the right person, they'll see this as what we've tried to create, which is a playground for ourselves with more likely upside, consistent upsides, and less risk. And again, I think it resonates for the right founder.
Yeah, and I'm going to push on a couple more points on this very same theme you just mentioned. Yeah, as founders come on, they are so focused on their own product, but when they look aside to 10 founders on the right, 10 on their left, they're like, wow. And they start brainstorming together. They realize there's something, not only the machinery there and the financial incentive, as every company exits, they get a slice of it, but third would be there's something bigger, right? People like to be part of something bigger, and they can brainstorm and build something they never even thought of, right? Once you start brainstorming and get those ideas flowing, that's amazing.
100% right. The camaraderie, I always say the right person wants to be part of something bigger. The entrepreneur journey can be quite lonely. And it's just not true here. Like we just had a weekly, call this morning. It's a group of people from all over the world with different experiences, solving different problems, but you're part of something bigger, right? And so you're sometimes celebrating someone else's success, and that motivates you because that's part of your success, or you're hearing the studio's success, or sometimes in the studio, I get excited about a new co-success. Like, we're all feeding each other. And, I've had a chance to work with some amazing teams my entire life, but I've never worked with a more disparate, talented group of awesome human beings than we have here. And that was kind of what we set out to do. So, probably the thing I'm most grateful for is the team we've attracted and continue to attract.
That's awesome. I'm going to bring up the next topic, which you hit on. I want to drill down a little bit more, which I'll call, for lack of a better term, operator control. That's several benefits. So we can, as a founder comes on board, as we already shared with you, we have the machinery to help that co-build it, right? Build company scale and exit them. But here is what is unique. Certainly investors, it lights up their eyes. Hey, if company 4 is moving faster to the goal line, use your sports analogy, football, soccer, whatever, closer to the goal, founder number 10, 4 companies over, will want to cheer you on and help you, right? But in addition, we can cross-license IP. We can, maybe pause something that's a little bit too early to the market, or speed it up. So that ability, once again, it goes back to your earlier point. It's not, hey, here's $100, good luck, passive. No, we're very much active, so we can shuffle things around to double down on the bets that are going to win.
Yeah, from purely an investor point of view, we have, as founders of these companies, controlling holder interest of these companies. And it gives us some powers, I say, that other people don't have as passive investors. That is not just powers we have, they're fundamental that we use them and flex them in order to mitigate the risk of early stage startups and unlock the value. I've been a part of too many startups, and I've invested in too many startups where you realize, ooh, that was a cool idea, but it was too early, or it was a cool idea, but the technology changed, or we got into the market and it was wrong, or not timing wasn't right, or there's a regulatory issue. There's always 100 reasons. If you look at the biggest reasons why people fail, they say capital is one of them, but I think it's timing a lot of times, or there's a team issue. Like it all translates to wasted time. If you spend a few years trying to figure something out and it doesn't work, you spent way too much money, the cap table's messed up, and those companies fail, even though it might have been the right idea, right? And we have the obligation early on to be tinkering with that. We love it, but pause. It's not getting the signal we want yet. Pause it. Let's prioritize this. Or this idea is too big. Let's split it into multiple ideas. Or this is a great idea, but let's get it focused just on this industry and spin off this technology and do multiple other industries as separate companies, right? And because the founders that work with us are part of the studio, they also can make those same decisions with us, and it's a positive thing. We're in frankly a venture capital environment. In the early stage, you're usually a victim of those VC kind of decisions. And by the way, I don't compare us to VCs. Our job is to focus on early stage creation, and at some point, companies need real capital to scale, and the VC market's got that nailed. So we're not trying to compete there.
Exactly. Once again, I always like to put myself in people's shoes. Like, why do founders, right, want to join us? We can talk a little bit why people like you and me want to be part of Nobody Studios itself. Maybe we get to that in a little bit. But I'm thinking of investors. And so I've talked to quite a few potential investors. Quite a few friends of mine and acquaintances have come on board. Here's what attracts them, no particular order. One would be obviously the big vision, right? People love a big vision, not some little product or feature, but 100 AI companies over 5 years. That's like, wow, how are you going to do that? That gets people's attention. And when they drill down, they're like, yeah, that's definitely doable. So one, I think, is the vision. Two would be that operator control, right? That ability to look at companies and advance them faster along. Three, we have the machinery. But four would be you're not locking up your capital for 10 years, and gosh, I hope that goes well. But rather, you're seeing exits, right, on a predictable. We're trying to exit companies, 24 to 36 month timeframes, and we're probably doing about 20 a year. That gets investors excited. Is that fair?
Yeah, it is. One of the things that I've always thought from the beginning is our financial models, the way we built it is very compelling. When we start companies, we're large shareholders, majority shareholders. We're optimizing for early to mid-stage exits, which we're still very large shareholders. And the way our model is, it's not a fund per se. People are investing into the parent company just like I own and you own. So, and we're always incentivized the exact same way investors are. We build companies and we exit them. And when that happens, we pay out distributions immediately. So, we're probably within 12 months of our first exit from where we stand today. And investors that joined 2 years ago and investors that joined today are going to be part of that exit. And when you start to stack this up with the numbers we're trying to build, there'll be a day that we have, 2 a year. There'll be a day that we have 2 a month, right? And those exits will be, it only takes a few of those to really make all the investors quite happy. And as you start to stack this with some repetitive, in predictability, it gets pretty exciting.
Awesome. Hey, I want to reiterate what you said earlier too, drill down a little bit more on the frugressive model. Once again, that's a combination of frugal and aggressive. I love that term. And let's just bring that more to life here. So, I don't know, having been a software developer very early in my career, I mean, you can think of distinct stages, as you develop a product. And here, what I love about this is not who can pitch the best, who has the best personality, who you golf with the most. No, it's based on evidence, right? It's not feeling, it's not optimism, but it's evidence-based at each stage that unlocks a little bit more money to truly grow and scale the company. And I'll give you some examples. I joined at the beginning of January, Nobody Studios. Day one, I hit the ground running, teaming up with one of our co-founders and doing, some basic things for finding a new adjacent market. Well, let's go interview, 10 people in that industry, very specific, understand their pain point would be one gate or milestone to understand. Two, these aren't necessarily these are highlighting a few of the milestones. Two would be get an MVP, minimum viable product up and running. Three would be get, X amount of paying customers. But anyway, there's clear milestones along the way where we can really figure out, is the company have the ability to scale or not? In some cases, we do kill ideas.
Yeah, and it goes back to the original kind of like lean startup, Bible that's been around for a few decades. And Barry O'Reilly, one of our co-founders, wrote Lean Enterprise. It's the idea of like before you go build out the entire website to go sell your e-commerce product, go put up a piece of, a one-page website that says click here to buy. And I don't care if it emails grandma and she's got to manufacture it and hand sew it and hand it to the grandson and he puts it in the box. Like, don't worry about all your automation. Don't worry about everything else. Just prove people want it. Once you had 20 people buy, then we figure out how to automate it, right? And it's really that same concept, except you can do it today in scale you couldn't do before. When I started my career, in fact, when you and I met, I remember spending 9 months with a product development team of 8
Yeah.
to write a product requirements document that we then handed over to the office of the CTO
That's right.
that spent 3 to 6 months assessing the production release, timing, et cetera, and we negotiated feature sets, et cetera. And you might be 2 years out to the next version release, right? That was standard, operating procedure back then. And today, I would do that, product management document probably in a day of AI-assisted discussions, obviously informed by conversations with, clients and others. But you would get that document together and you would seamlessly hand it over to something that would create an MVP.
That's right.
And you would find a way to put it in the market and to get validation potentially within a week, right? And so the speed of being able to test ideas changes how you think about making bets. That's the way we think about it in Frugressive. That earliest stage is, I don't know, we have a hunch. How can we test it? Someone told us we should do this. It passed the sniff test. We should test it. We've got a set of criteria, as we talked earlier, like dirty AI and other things that we think we're going to build companies that fit our niche. But if it fits that niche theoretically, then we have early, quick, fast, cheap ways to test it and then scale our investment, after that.
Awesome. Hey, I'm going to close out this section almost like bullet points, just kind of list off, I think, 6 things or 7 that really represent Nobody Studios. But one would be one investment, 100 opportunities, right? Certain, whether it be high net worth individuals, family offices, like the ability to one relationship, 100 opportunities. 2 would be that operator controller, might be a better word for that, but we're shaping the outcome, right? We're not passive, just, hey, good luck. 3rd would be we're optimized, built for this very market shift we just talked about earlier in the call, right? Due to our quick exits. 4th would be related, that faster liquidity. And also it's that progressive approach that we have, that frugal and aggressive approach. And actually, let's close out on this point. And also very attractive to founders, right? They're part of a bigger thing. I'm just trying to sum up here, right? They're part of a bigger thing, a bigger opportunity, a bigger vision where they can create new ideas they never even thought of. And actually, I forgot one. Why don't you touch on what makes this interesting from an investor point of view? Another thing I missed was investors as they come on board. Mark, please talk. Some people just want to give money. That's fine. But there's other opportunities, if you could talk about that, and maybe highlight some of the roles our investors have around the world, what kind of companies they work at.
Yeah, look, I think we got very, fortunate when we decided to open up our angel round, the first time we brought in capital outside of my launch capital. You'd like to say you scripted it, but I think it has a lot to do with luck and relationships and one thing led to another. But, the folks that came aboard brought the capital we needed to go the first, couple years of growth. And they just came from, world-class backgrounds across multiple industries, and it was, former CEO of Coca-Cola and, heads of innovation, American Airlines and Volkswagen and, technology officers at some of the leading banks in the world and 5 international best-selling authors and executives from development to strategy to sales at every tech company you could probably think of. And so it's given us a very unfair advantage. I'm always grateful for the folks that gave us the financial support, but I really think the long-standing value is the folks that got involved in the journey. They're just good people. They're generous people in their time, their relationships. They believe in what we're doing. They're like scouts. None of these people I could afford to pay an hour to talk to me, right? But they're quick to just text us or respond to a request or make an intro, or maybe they see something at a conference and they're like, hey, you guys should take a look at this. Like, it's really, very fortunate to have that as part of our ecosystem.
That's awesome. Yeah, and like you said, they can provide us introductions, intel on an industry. And that ties back to my earlier comment, moats for a company. In some cases, a moat is the distribution channel. Do you have access to ways to get to market quickly? And we certainly do there.
Well, I'll just come back to that real quick. Like, one thing I've always felt in early stage companies that I've been a part of the past is like, man, if I could just get to this person.
Yeah.
And you spend a lot of time trying to get to somebody in a certain industry. Um, I gotta tell you, I think we're probably a text away from an intro to every person we might want. Like we're very fortunate that we have a very broad group of investors from different industries, all at senior levels, and so there's somebody I can reach out to, and we're going to have an unfair advantage to talk to the right person.
That's awesome. And I'll tie it back to our progressive approach, right? That frugal and aggressive approach. As we build a product, in fact, even before we build, we're already thinking, hey, who are the first 10 customers and who is going to be the acquirer, right? Who's going to exit? And sometimes we can have discussions before you even get started, right? Going back to those relationships. So you can already connect dots even before you start, which is a great advantage.
Yeah, we think it's fundamental. I mean, it's in a world where you're trying to build companies lean, mean, and kind of be optimized for an early to mid stage exit. The exit, it's not the old school way of thinking, but we think you got to think with the exit in mind from the beginning. You know, build a world class, long term, generational company. God, that's everybody's dream. That's how I grew up for the first 30 years. But where the market is today, locking up some great IP and a great team can lead to a mid stage exit that's going to be great for investors and employees and co-founders. That means you got to be thinking early on. Like if I'm looking at two ideas and I only have the budget and time to do one, then I'm going to ask, what is the likely exit path? If one of those only has one exit path and we don't know anybody there, and the other one has 25 exit paths and we know 14 of them, I'm going to green light the latter, right?
That's right. Yep, right on. Okay, very good. We covered market dynamics, trends. We covered why Nobody Studios. Third part and final, Mark, why now? Why co-found with Nobody Studios? Why invest in Nobody Studios? Why be a partner? Why now with Nobody Studios?
Well, I really wholeheartedly believe this. Anybody I'm talking to, like, if you don't do something with us, find somebody like us, right? I'm so convinced of this market, and I've got a lot of experience, a lot of scars. I've had enough successes to have some credibility. But at the end of the day, I think a lot of times in different trends, you and I have been doing this for a long time in the tech space. I've been a part of some big trends, but I've also missed some, right? I'm sure you have the same idea. I've missed a few opportunities to be part of some big companies, right? And I'm like, oh gosh, I wonder why I missed that. Oh well, you win some, you lose some. This isn't one of those win some or lose some moments. This is one of those you're in or you're out in the next 5 years. And if from the outside looking in, you're gonna be like, how did I miss that? Like, it's not one of 25 things and you picked one thing. This is the big thing. And if you're kind of thinking of it slow, the same way you might have looked at other trends, and you're not freaking out trying to figure out how to get into the early stage, broad bets across multiple AI kind of changes, I think you're missing the boat. So it doesn't have to be us, but you're going to need to be talking to someone who's talking like us.
That's right. And I always try to sum up in a few sentences to my friends who are very curious what I'm doing here with you, Mark, is I just mentioned, like we discussed, right? AI revolution, it's moving fast, unprecedented speed, biggest wealth creation event ever. And we're purpose built for that, right? We're experienced founders building companies ourselves from day zero, right? The precise point where the greatest value, we talked about that earlier, the greatest value shift has now moved to earlier in the process. And we're creating 100 AI companies over the next 5 years to do this. So definitely exciting times here in the studio, Mark. Thank you so much for joining me today. And we're going to be having regular updates. Any final words you want to share before we close out?
I just think it's a really exciting time to be living as a human, as a creator, as an investor. It's got its share of scary times as well, but I just think you got to lean into this moment, and you got to figure out what you can do to be a part of it, to affect change, to take some of the emerging technologies and either steer it towards something you're passionate about, accomplish a goal you cared about. Like, it's a time to embrace what's going on. And we're, one of the reasons why we built this, why I built it, and why a lot of other people joined, including yourself, is I am wired and I need to. I always said my eclectic career in the first 30 years gets a chance to make sense right now because of the speed and how fast so many different things are changing. And, it's not for everybody to lean into it, but it's going to affect your world one way or the other. And again, if you're an investor, creator, builder, now's the time to figure out how to swing big.
Now is the time indeed. Hey, Mark, thanks so much for joining me today, and we're going to close it out. Thanks.